Good afternoon, everyone. Today is Friday, the 15th of March, 2013, and this is Brian Shannon speaking from AlphaTrends.net. Hope everyone enjoyed a good week. We did have a pretty positive market once again. The NASDAQ was down slightly, as were the semiconductors and the U.S. dollar, but everything else was higher, including the financials once again, which are now up 12.5%, and the Russell 2000 almost up about 12.5% as well. When we look at the S&P 500, we can see obviously we remain in an uptrend. It's easy to make a case that we're extended or that we're at the high end of this channel and maybe need to pull back. Even towards the middle of it would be a pretty deep correction here and get us down towards this most recent gap down at 153. But before that becomes a scenario that we take seriously, we have to look at the shorter term levels. And realistically, as long as we remain above probably about 154.90 to 155.10, this should be our little band of support early next week. If we break below that and stay below it, then we want to be prepared for a little bit deeper pullback. And by that point, you should have been stopped out of positions. And then we want to sit on the sidelines and wait for the market to reset up again because the primary trend is higher. More aggressive people could obviously sell short, but I still think that the short sales are best contained to either individual stocks that are in downtrends or to day trades if you're going after these indices and trying to make profits on the short side. The NASDAQ, again, it was down slightly, but the more important thing is that it continues to hold up above key support. We talked about this 68.30, 68.40 level, and that if that were to be broken, that we would probably head down towards about $67.80. And I still think that's something that we have to be aware of next week, that we have, I think, a decent chance that that will happen. But for now, it doesn't make any sense to bet short against this market because we are holding support and the path of least resistance overall is still higher. So the odds favor upside continuation, but we always have to be cautious about what the other scenarios and the potentials are. For the week, the NASDAQ was closed slightly below the volume weighted average price for the week, and obviously, well, it was lower as well. But the Russell 2000, as we noted, still in this tremendous uptrend. We could try to draw some trend lines off of this, and I didn't mean to go there, but something that looks maybe more like this, and it's still within this bigger uptrend channel. Just a phenomenal rally here. The midpoint of this channel would probably bring us down towards about the level we were talking about last week, which is about 93. But even now, we got a little bit further extended from that level this week, and the low end of the range is about 93.15. So between 93.15 and 93.75, this is going to be the key level we want to see hold as support next week. A pullback down into that zone wouldn't be a bad thing. It wouldn't be something that got us negative. We want to keep an eye on trend lines and the rising 5-day moving average as well. A lot of people I've seen are trying unsuccessfully to try to pick the top in this market. It's much easier to go with the trend, and once it gets extended like this, if you're not a believer in the market, it's easy to believe in the market as long as it's making these higher lows and it holds these levels. If, for instance, on Monday we break below and hold below about 94.35, that will be a very short-term caution area for this market. But again, we want to give the benefit of the doubt to the buyers. That's so far been the correct thing to do in this market, and until we start getting stopped out of positions and it breaks below support levels, and we've seen some support levels break in this market earlier, just about a month ago, we saw some support break, and then we got cautious, and this kind of turned the light back to green over here 2 weeks ago. So the key always is to listen to the message of the market. Quit trying to impose our beliefs on it and say it's up too much or it's extended or whatever. The Russell 2000 just continues into all-time new high territory, and if you're fighting it, as I like to say, I think you're getting what you deserve for fighting an uptrend. Though people that will argue with me on that, but I feel like anytime I argue with the trend and I lose money, I got exactly what I deserve because the evidence simply isn't there for a top. Now, maybe we gap down big on Monday and that's the end of the move. If that's the case, well, that's what stops are for. To have a disciplined approach to the market and to continually be able to implement that by listening to the message of the market, that's what gives us more consistent results and allows us to stay ahead of the market and again be more consistent. I use Realtic software. That's the software that we're looking at. By now I'm sure you know this, but they do sponsor the show each and every week on YouTube on Fridays. So take a look at realtic.com, and let's now take a look at so we'll want to see this bigger band down here hold for support in the Russell 2000. For the semiconductors, we got down into this little band of prior resistance in here today after it looked like the market was really just going to make a nice move on Thursday. We had some good strength in there where it broke out and then it came out to new highs for the year, but did get rejected back in. So that's something to be aware of. It looked like we were going to head beyond last year's highs, but for now we have a little bit of resistance in this area. We'll see if it turns into something bigger, but that does just give us reason for caution. And the key area in here is probably closing below $35.25 or so could turn this market a little bit more negative. And if we maybe come down in towards about this 34.50-ish, 34.40 level is a possibility for this market still. Maybe come down and test that rising 50-day moving average. The financials, again, these were a strong group this week. Once again, here's our weekly chart, and as we've been talking about, it seems as though they are gravitated towards this $20 level. Whether we get a deep pullback before that occurs is anyone's guess, but for now, the trend remains higher. Innocent till proven guilty is the way we want to look at this thing, and down near about $18.20, we have a cluster of lows in there and a rising 10-day moving average as well. So initially, I think about $18.20 is what we want to see hold early next week. If we were to fail there, then perhaps we come back down into $17.95 to $18 a share on the financials. But here's another group that's arguably getting extended back to the midpoint of the range will kind of bring us into that level as well. So going into next week, we want to be aware that these markets have obviously had really strong rallies and they seem due for a correction, so be aware of the shorter term levels that if they start to break and if we're below 5-day moving averages, then odds would favor a little bit of further correction, pulling back either price wise or in the case of the financials, they really haven't had deep price pullbacks. We saw that one test of the 50-day moving average a couple of weeks ago, but maybe more of a correction through time. Speaking of corrections, Apple was up here today on some pretty good volume, and what I did was draw this trend line in off of the peak from 2011 up to the high this year of 555, and you can see we're right below that trend line. It's tough to say, maybe at about 450 or so. Another thing that's interesting about Apple is that the volume weighted average price since the earnings, that is, since the stock gap down on January 24th, this purple line indicates the volume weighted average price. So it's about 449. So I would expect that maybe this market continues, that Apple continues up towards about 450 and then finds a little bit of resistance in that area. If we take a look at just this 65-minute chart, you can see where this resistance was broken in here, and that's good to see that it got back and held above this 438-ish area, but we are into this prior band of support, so we're just at the top end of that. So I don't think that it's prudent for anyone to be calling a bottom in Apple. We still have a declining 10, 20, 50, 100, 150, 200-day moving average. Intermediate term, yeah, we have a rising 5 and maybe 10-day moving average, but the declining 20-day moving average, it's still, I think it goes back to the old term. If they don't scare you out in a stock like Apple on the way down, they'll typically wear you out. There's obviously great opportunities for bounce trades in there, and if that's your game, then that makes sense. But looking for the ultimate bottom in this stock, I just don't think it's prudent to do that yet until we have these longer term moving averages flatten out and the stock starts making higher highs and higher lows above it. You won't get in at the bottom with a strategy like that, but you'll avoid a lot of false rallies like the ones that have seen in this market all the way down over the last 6 8 months or so. So hope everyone has a good weekend. Tune into alphatrends.net for some other information. I did a post about pivots this week and got a lot of good feedback on that. So go to alphatrends.net and take a look at that, and follow me on Twitter and StockTwits. My handle is at alphatrends. Have a good weekend.